You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 30th day of January, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. First broadcast is our live training room. Now, that's reserved for our members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, you can do so by going to mytradingiq.com. And at the very top of the page, there's a link that says 5-day free trial. No credit card required. Click the link, fill out the registration form. Take a minute to make sure you get it correct, okay? Otherwise, because it's an automated process, we won't get the notification that you want to take the trial, and we want to get your desktop set up. We want to get your indicators indicating. And then let's say you sign up today, your trial will actually begin tomorrow. Now you get 5 consecutive trading days, even if it stretches over a weekend. So don't worry about what day of the week or weekend or hour of the day that you sign up for the trial. You will get 5 consecutive trading days, again, even if it stretches over a weekend. So the markets are pretty quiet. A lot of sideways movement in the indices. Fed announcement tomorrow. So the markets just may remain this way until the Fed announcement comes out tomorrow at 2 p.m. Eastern. There'll be initial volatility based upon the FOMC statement. Then at 2:30 p.m. Eastern, Jerome Powell will deliver a prepared statement. And then the fireworks really begin when he finishes delivering his prepared statement and opens the floor for questions. Our best advice, be flat ahead of the Fed. Let all that transpire. And then when the market resumes its normal rhythm, that's when you want to step back in. This way you don't get blown out of the water. Trading news events. Now, there are some people who trade news and do it very well. It's their thing, okay? Those people are very rare. For the average trader, trading a news event, it's kind of like gambling. And everything we do and teach is the antithesis of gambling. We're looking for high probability, low risk trade opportunities. So again, if you haven't taken the trial, go to mytradingiq.com. Click that link at the top of the page, and you'll be in the live training room with us tomorrow morning. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast. That would be this broadcast. Now, there's a couple different ways to join this afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com and scroll down the page to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen going forward? Every trading day, about an hour before this broadcast starts, you'll get an email. In that email, there's a link. So, at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from the desktop. You can't join that way, but you would still, even though you're out and about running errands, doing, picking the kids up from daycare, whatever, you'd still like to join the afternoon broadcast live. You can. And there's also going to be days when you're busy and can't join live, but would like to get caught up later. You can do that too. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. Easy to remember because you already know the YouTube part, so you just need to remember /CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there's over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but you can actually see how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. And just, pick a few days at random. Listen in for a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Okay, let's get going. We'll open with our daily devotional and a word of prayer as we do every day. Then we'll get into the markets, and at about 12:45, 12:50, Michael will join us. He'll give us a recap of what happened this morning in the live training room. And then we'll go live on the TradingView platform for 30 minutes, do some live trading, and then I'll wrap things up with our good word for the day. The topic of our devotion that we started last week is how to be rich God's way. Number one, put your hope in God. Now, that begs the question, what do you do in order to put your hope in God? What are the steps? Well, here's what Paul had to say in a letter to Timothy. In fact, it's our scripture for today. 1 Timothy 6:18. Paul wrote, "Command them to do good, to be rich in good deeds, and to be generous and willing to share." There you go. It's pretty simple. A step-by-step plan in one sentence for keeping your hope from migrating away from God and towards wealth. If you think about it, adhering to that command would definitely have an impact on things. Imagine if every rich person were to live by that statement. It would be hard to be arrogant if you spent all your time thinking up things to do that were good. And you couldn't be rich in good deeds and generous and willing to share if you also put all your hope in the things you were so generously sharing. Here's a simple mantra that sums it all up. I like mantras because they summarize big ideas into little phrases that are easy to remember. Are you ready? Here it is. I will not trust in riches, but in him who richly provides. Now, go ahead, say that out loud to yourself a couple times. If you're sitting alone in a Starbucks, adjust your Bluetooth headset first, and nobody will know you're talking to yourself. Now, the mantra again is, I will not trust in riches, but in him who richly provides. That one simple shift of your mindset holds the key to being good at being rich. Yesterday, we talked about all the side effects of wealth. And the side effects that come with wealth are the very things that keep us from being good at it. Ironic, don't you think? The richer you get, the harder it gets to be good at being rich. But if we can address the temptation to trust in riches, I will not trust in riches, and reinforce the idea of trusting in God instead, but in him who richly provides, then we neutralize all those side effects we talked about yesterday. Sounds pretty simple, right? Just repeat that handy phrase to yourself a couple times a day, and you're set. Here it is one more time. I will not trust in riches, but in him who richly provides. Join me in a word of prayer. Heavenly Father, as we gather together today, we thank you for the wisdom that we just found in 1 Timothy 6:18. Lord, we thank you for your guidance and instruction that is found in your word. We recognize the call to generosity and compassion that is woven throughout Scripture. Help us to embody these virtues in our lives, particularly in our roles as traders and members of this community. Grant us the grace to do good, to seek opportunities to bless others and make a positive impact in our world. May our actions be marked by kindness, generosity, and a genuine concern for the well-being of others. Lord, we ask that you make us rich in good deeds, overflowing with acts of love and service. Open our eyes to the needs of those around us and give us the courage and compassion to meet those needs to the best of our abilities. Help us to cultivate a spirit of generosity and willingness to share, recognizing that everything we have ultimately comes from you. May we be open-handed and cheerful givers, reflecting your abundant grace and love those in our midst. Lord, as we seek to live out the principles of 1 Timothy, may our lives be a testimony to your goodness and faithfulness. May our generosity and kindness point others to you and bring glory to your name. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen. And happy Tuesday. I hope it's a happy Tuesday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 48 points. The NASDAQ is down 88 points. S&P 500 is down 3 points. And the Russell 2000 down 12. Like I said, some pretty quiet trade out there. And in the commodity basket, crude oil up $1.20, trading 77.98 last. That's a gain of a little over 1.5%. Gold up $9.40, trading 2,054 last. Silver down 3 cents, trading 23.21 last. In the Asian markets at the close, the Nikkei posted a gain of 38 points. The Shanghai dropped 52. The Hang Seng, now for the Shanghai, 52 points, that's almost 2%. The Hang Seng fell 373 points, which is over 2.25%. In the European markets at the close, FTSE posted a gain of 33 points. The DAX rose 30. CAC gained 36. So we had a mixed day in Asia. It was a green day for the UK. And so far, it's a mixed Radio Tuesday here in the US of A, with the Dow in the green by only 48 points, and the other three major indices, the NASDAQ, the S&P, the Russell, in the red, but not by a lot. So it's just some kind of quiet sideways trade as we head into the FOMC. And again, that announcement comes out tomorrow at 2 p.m. Eastern. And then at 2:30, that's when Jerome Powell will deliver his prepared statement and take questions from the audience. So let's take a look at Logic 247. Is it the best week we ever had? Far from it. But it's always dependent upon market conditions. When there's a lack of follow-through or very little movement, as we go to when we go to the charts, you'll just see how flat everything is. Not a lot you can do with that. So do the best we can. We're in week 287. It's been 287 weeks since we launched Logic 247. And over those 287 weeks, we have issued over 16,000 individual handcrafted alerts. We've averaged 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, this recap was done at 6:30 a.m. this morning. Valerie will update it this afternoon, and then probably again this evening. At the time of the recap, and it's still the same because I haven't issued any alerts today because I just didn't see the markets. I don't issue the alerts to entertain you. They're a training tool, okay, to teach you how to find windows of opportunity in the market. And when I don't see windows of opportunity in the market, then there's nothing to post. So there may not be any today unless the market dynamics shift. Tomorrow, we'll see what that brings. Thursday, perhaps we'll be back to normal. S&P 500 put in a new all-time historic high today, in case you didn't know. All right. Since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 24 alerts. And at the time of the recap, we were still waiting on 14. So we had 10 actionable alerts, which 3 or 30% would have been stopped out based on market structure and that simple process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, the logic alerts are based on current price action, but there's time built in to each alert for you to get the alert, go to your 30-minute chart, see the window of opportunity that the alert represents, understand why there's multiple targets, potential resistance, potential support, depending on if it's a long or a short trade. Because that's your first stepping stone to becoming self-sufficient. Our goal is for you to become self-sufficient. If your goal is to learn how to trade for a living, it's never going to happen as long as you're dependent upon someone else to tell you when to get in and when to get out. You have to learn to read the chart and understand that price flows the same across all markets and all time frames, whether it's futures or stocks or crypto or Forex or ETFs. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. The logic alerts can come out at 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. So our day session is their night session and vice versa. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're different in a couple different ways. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex open. So we all know today's the Tuesday session. And it will be the Tuesday session until 5 p.m. Eastern. For stock traders, 4 p.m. Eastern, but for futures traders, 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, the markets will reopen, and that will be the beginning of the Wednesday session for those trading futures. So last night, the Tuesday even though it was Monday night here in the U.S., the Tuesday session began last night at 6 p.m. Eastern. And so 10 minutes into the life of the first 30-minute candle, I got the report published. Okay. Now, because this broadcast is open to the public, unlike the first broadcast of the day, which is reserved for members only and those taking their 1-week free trial, if you want to grab a screenshot, you can. If you're watching after the fact, you can just hit pause on the video on our YouTube channel, youtube.com/CFRN, because we're going to walk through each one of these individual markets before the end of the broadcast. Okay? So what's the first thing you do when the report is published? Go to your 30-minute chart and make a note of where price is at the time the report was published. It will always be between these two numbers. Once you've made note on your 30-minute chart where price is at this time, even if you show up at 8 p.m. Eastern, you still want to go to your 30-minute chart and make a note of where price was at the time the report came out. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is simply the green line you'll see on all my charts. You can put it on a daily chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart. BBC just stands for bull bear cross. When price crosses above that green line, we're bullish and anticipate higher prices relative to whatever time frame you're looking at. If price crosses below the green line, we're bearish and anticipate lower prices relative to whatever time frame you're looking at. That part's just really simple. Above the BBC, think long. Below the BBC, think short. Now with the logic alerts, I look left to spot potential obstacles, previous swing highs and swing lows that can become current support or resistance. With the CTAs, you're taking the next step and learning to look left yourself to spot where those potential obstacles may be. You'll also learn over time how price behaves at a weekly trading zone. That's very important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern till they close Friday afternoon at 5 p.m. Eastern. If price is above the 30-minute BBC, it's trying to get to the weekly zone above. If price is below the 30-minute BBC, it's trying to get to the weekly zone below. We've published the zone since December 14th of 2009. Yep, I said 2009. Long time. Every week. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, carved in stone for the entire week. They don't change in any way whatsoever. We don't massage them. We don't manipulate them. Once they're published, that's it for the week. Okay. Once you truly understand how price behaves at a weekly trading zone, the zones will become one of the most important tools in your trading toolbox. Other than that, just resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's go take a look at the daily chart. Now you might say, well, I don't trade the daily chart. I don't either. You might say I don't trade the S&P. Doesn't matter because price flows the same across all markets and all time frames. Institutional traders, the ones who move price because of the size that they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Most of these institutions have accounts in the hundreds of millions, billions, and some even trillions of dollars. So when those deep pockets trade in size, that moves price. So if you'll learn to just spend 2 minutes with the daily chart before you start your trading session on the smaller time frames, You'll get an indication of which way the wind's blowing, and you'll easily identify where major resistance is and where major support is. Today's high, 49.57 and a quarter. Yesterday's high, 49.56. So we took out yesterday's high by 1 1/4 points. I'm always suspicious of a new high or a new low of just a couple points. It tells me there's not a lot of conviction there. Now, take a look at the size of the daily candle in comparison to all these other candles. This is the BBC, the green line. When price pulls up from below, it holds more often than not. And when price pulls down from above, it holds more often than not. Like here and like here. Now, I mentioned yesterday that the step line is starting to lean to the right. If the step line crosses blue and climbing, this indicator, the red and blue indicator, it's the CFMA1. I refer to it as red and falling, blue and climbing. Obviously, one is bullish, the other bearish. Once the step line, the black line, crosses from the, see on this move up, how the step line has been on the left side of blue and climbing? Once it crosses blue and climbing, that's an indication that we're probably getting ready for a pullback to the BBC. See how the step line crossed here? And we pulled back to the BBC. Over here, the step line crossed red and falling, and we pulled back to the BBC. It's really just a heads up, okay, that the move to the upside may have hit its apex. And now it's going to pull back to the BBC, which we anticipate holding until proven otherwise. Eventually, price will trade through the BBC. That keeps the markets fluid and tradable. See over here, we're building legs to the downside. Leg, retrace, leg. But on the retracement, we traded through the BBC. So now it's leg, retracement, leg, retracement, leg, retracement to the upside. So the market's always building legs to the downside or to the upside. Price is always trying to do one of two things: break the previous swing high or the previous swing low. Now, this is a pretty tiny candle, but the market is starting to show some weakness. It's getting red. And so as we go to our 30-minute chart where all the alerts are created, we can see that price is sitting right on top of a weekly zone. It's been consolidating there for a lot of hours. Only three things happen at a weekly zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. See how this candle sliced through the zone like it wasn't even there? This was a big green candle all the way up. But when it ran out of steam, what happened? It retraced to the zone it sliced through, and after retracing, continued in the direction of the slice. So only three things. 70% of the time will be consolidation. Now this zone is 49.47/48. Now these are 30-minute candles. You can see how many hours we've been stuck here. But we're below the BBC, the green line. We want to see blue and climbing turn to red and falling. And that will happen probably as price takes out this swing low right here. So where's a good window of opportunity? $49.38 to $49.34. That's a 4-point window of opportunity at $50 a point. It's $200 per contract traded. You've earned the right to trade 10 contracts, and it's $2,000. On the broadcast yesterday, we drew in this window of opportunity, and as you can see, it filled beautifully and then some. Now, before price can fill this window of opportunity, it has to take out this area of support right here. See, this was a red candle all the way down, but when it reached the low 49.40.75, buyers stepped in, bid it up. Not a lot. And then it got promptly smacked back down. And now the high of the day, high of last night, just barely higher than yesterday's high. Again, when we get a just barely higher high, we're very suspicious of that until it proves itself. That's where patience and self-discipline comes in, when you allow price to prove itself. So with the flat market, we haven't hit either the short target or the long target, but there have been opportunities to get your goal for the day. You're above the BBC, you got blue and climbing. This candle opened at 51 1/4, and it ran up to 55.75. So that'd be about 4.5 points right there in that one candle. And you know to trade long because set a green candle, you're above the BBC, you got blue and climbing as backup, so you trade long. Why did price stop there? The answer is always found by looking left. Okay? In fact, it stopped dead on yesterday's high. See that? All right. On the Dow. Remember when I gave you the numbers from around the world, the Dow was the only one in the green. And not by a lot. This was the opening candle last night. We just were flat and sideways. And then this morning, the Wall Street Open, we got a pop to the upside that quickly reversed. And then this candle here took us up to the target and to the zone. When price moves up to a zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. This zone is 38,375/380. Okay, so we came real close. Zones are an area, just like fibs are an area. Yes, they both print a specific price point on your chart, but it is an area. Okay, and so what are we doing? What we do 70% of the time when price hits a zone: consolidate. Consolidate. 20% of the time rejection, 10% of the time the slice. On the Russell, this is where we opened. We dropped to the BBC, we consolidated. We had red and falling, and so that took us below the BBC, right down to the zone where we found support. Remember, when price drops to a zone, we expect support until proven otherwise. It bounced us back up to resistance. When the market finds support, it's going to then go look for resistance. When it finds resistance, it's then going to go look for support, which it found right here at the weekly zone. Bounced us all the way back up, and we came down through the zone. Okay, and now we've got a double bottom right here. There's a window of opportunity from about 1998 down to 1996. Possibly all the way down to 94, the short target. That was published last night, 10 minutes into the life of the first candle. On the NQ, here's where we opened last night. Sideways, just like the other markets. Finally dropping below the BBC. And down we go to the zone. When price drops to a zone, we expect support until proven otherwise. So 1, 2, 3, 30-minute candles tried to get through, but they were rejected. That's what happens 20% of the time. And then finally on this candle, we made it through and we hit the short target, where we are now consolidating. Now, this low right here, okay, this was a red candle all the way down. Why did price stop right there? If you look left and follow the horizontal line on my cursor, you'll see the bullish cross. When there's a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. Same is true of a bearish cross in the opposite direction. In other words, you see we had this bearish cross right here. So if price were to suddenly start rallying and got above the BBC, we would expect resistance first time up right at the bearish cross. Crude, here's where we open. Bounced up to the BBC, resistance, sent us to the zone, support. We managed to get over the BBC, but not by much. Couldn't take out that swing high. So we get back below the BBC. This time we managed to get below the zone. See, we tried here. Finally got through, made it down to the target, to the tick. Support will always send the market looking for resistance. Resistance will always send the market looking for support. And we'd have to scroll back further, find the area that correlates with this. It's there. Go find it. Now, this high right here yesterday, this candle opened green and immediately got slapped down. And that's exactly today's high on crude oil. So we bebopped along above the zone, and then once we got through the zone, we hit the short target. Support sends us back to resistance, back to the target and support. Support bounces us up above the BBC and the zone to the target. Retracement to the zone, back to the target, back to the zone. Gold, we are now in the J contract. Here's where we opened last night. A leg and a retracement and a leg that took us right up to the target. We spiked the zone, consolidated. Now the zone is 2055/56. So we consolidated in the zone for a while, dropped back to the BBC, spiked down to this low, got back above the BBC, made a run at the zone overhead, and then along came the 10 o'clock news. And where did the market find support? At the zone. Support will always send the market looking for resistance. BBC. Resistance will send the market looking for support. You got red and falling overhead, you're below the BBC, you should be looking for a window of opportunity on the short side. The issue is you have potential support here, here, and here. 20. Yeah, that's just a little tight. So the obvious trade is to the downside, but be careful. Silver, here's where we opened, pulled back to the BBC, made a run at the long target, came down to the zone, support, 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 rejection, rejection, and then we made a beeline right to the target. And from there, we came right down to the short target and the weekly trading zone. Now we've bounced back to the BBC. Michael has joined us, so we still have one more market to look at, the euro, but we'll do that after Michael gives us a recap of the live training room. We'll go live for 30 minutes on the TradingView platform, and we'll wrap things up with a final look at the markets and our good word for the day. Michael, if you're ready.
Excellent. I am ready. No trouble getting in, huh?
No, they seem to have corrected whatever problem was experienced earlier this morning.
Good. Yeah, I had no trouble getting in either. But happy to see that it is corrected.
All right, looks
Right.
good.
Good. Here we go then. Good afternoon, everyone. Today is Tuesday, the 30th day of January 2024. Yeah, if you have not taken a free trial with us, go here to mytradingiq.com and click on this purple button right here. Click on that, you're going to be brought to this registration page. Right on this page, I'll be asked for your name, your email, your phone number, fill out the rest of it. Down here, if you have TradingView, give us a username or a login ID. If you have NinjaTrader, give us your machine ID so we can set the indicators up for you. Okay, so you can get that done ahead of time. Yeah, so let's get into the spreadsheet. We had another, well, we got the goal early on, but then we gave it back again. Well, there wasn't all that much trading going on today. Just like yesterday, there wasn't all that much trading. We see FOMC this week, 65.95. Let's go to tomorrow's link. I guess I gotta add a couple more days in here. Well, tomorrow will be the last day of the month, so I don't have to add another day. And I have next month all set up and ready to go down there. Look at that. Anyway, if you look at the spreadsheet, you gotta read all CFTC risk disclosure. Read all the CFTC risk disclosures down at the bottom. Wow, I'm used to saying that really fast. Anyway, we made 12 ticks on the NQ, 27 ticks on the Russell. We lost 10 on crude, and we did not trade the ES. So we're up $95 this morning with one contract. Today it took 13 minutes, I'm sorry, 13 minutes and 4 trades to get to $2,080. Now that was with 13 contracts on $2,080. It took a total of 18 trades this morning. So on the month now we're at $9,430. That's over 20 business days, averaging $471 per contract per 2-hour business day. Same thing on the year, $9,430, same thing on the year. Now, if you were to quit trading when you get your goal for the day, and you were to start this last year in January and add 1 contract per month, right now you would be at 13 contracts, which I am. And after tomorrow, Thursday, I'll be at 14 contracts. I had to make $26,000 this month, quitting when I get the goal for the day. We're at an even $39,000 today. When those even numbers come up, it just seems odd to me. Like when we had exactly 5 hours and exactly 7 hours down here. And that's just the total number of minutes that works out to be. And it comes up to a perfectly round number. Just, I love numbers. Anyway, So if you were to quit trading when you got your goal for the day so far this year, you would have worked almost 8 hours so far. Almost 8 hours in the whole month of January. And you would have averaged $4,915 per hour. So they weren't real hard to work. That is where we stand on the day, the month, and the year. Now, I'm going to look at something. This is kind of annoying to me, but I'm going to show you something. Those of you guys that were watching yesterday, we were looking at this big picture stuff yesterday. I guess I can go over this in a few minutes. Let me finish going through what I was going through here. Okay, so we'll go through the trades here on crude. We're out with crude, and you can tell there's not a lot going on here. This was in the pre-market. We had this nice blue arrow right here in the pre-market, enough to get your goal for the day. And look at the leg length set up right there. That thing was just going up, up, up all day until we took a trade. Then we took a trade and it stopped us out. It started to establish a really, really big size leg length right here too, and kind of a hiccup right in the middle of it. But you can see the same size leg length is sort of continuing. It got a little messier though. We ended up getting a break even on this trade, and I believe that's all we did. There was one more blue arrow right over here that I would have gotten a break even on had I taken it. Assuming I got a good entry, I would have gotten a break even on that. And that was it for that. Now the Russell. Let's go back to the beginning of the Russell. And all this FOMC stuff coming in tomorrow. We actually have other high impact news coming in tomorrow too. We had high impact news today. They said it was good news. I don't believe any of it. We had a break even on this first trade here on the Russell, and then the next trade in here we picked up 4 ticks. Okay, and we had another break even. And then on this one over here we picked up, it looks like 13 ticks to get us to 17. And this one right here we picked up 10 ticks to get us to 27. That one made it exactly down to the swing low. No, one tick beyond the swing low. That was 30 ticks from my entry was the swing low. Exactly. It was also the low of the day at the time. We took another one over here for a break even, and that was it. That was it. During the break, there was one blue arrow right here, one blue arrow short, and there's a green arrow over here. And that was all of that. Right, on the ES now. Wow, look at all the no trades on there on the ES. I guess I don't have to go anywhere with the ES. We can put it right here. This is the whole morning on the ES right here. No trade zone. Pretty much from the start. We had one green arrow right there that I didn't do. And no trade zone all morning. And then we get here and there was one more green arrow during the break. That would have been a break even. That was the ES. Wow. All right. And we had the majority of our trades on the NQ, but it still wasn't that many. Definitely not 5 minutes worth of talking. But we'll go back to the beginning of the NQ. We'll go back to the beginning of the NQ. Here we go. Our first trade on the NQ was right in here. We had a break even on that one. Next one was right there. We had a whopping 2 ticks on that. And then we had this one right here. We ended up getting 30 ticks on that. Followed by a break even trade right there. And that was it. We had 32 ticks right there. Then the next trade that we took, it seemed like it came a lot sooner. Yeah, there's something missing in here. I had a stop out somewhere in here. I had a stop out. The next trade that we took in here was a stop out. And I ended up going from 32 down to 12. And then I had this one right here where I picked up 8 ticks. And that got me back up to 20. And then I had this one right here where I picked up 12 ticks. So I got me to 32. And I had this one right here that stopped me out. And that put me down to 12. One more break even right there. And then we went into the lesson plan. I didn't do anything during the lesson, plus like. And we finished and during the break. It was a trade there, 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 there. And it just got sideways in here. And that was it. That was the NQ. I don't know what we're going to end up with here during the next half hour when we start this live stream here. The market's really slow here. You know, we could drop down to a smaller time frame and look at things on a smaller time frame. Or we can just look at something else altogether. But I don't see any questions being asked in here, so I'm just going to say, if you haven't taken free from you want to, then you need to go here to mytradingiq.com and sign up for the free. Right? It's pretty straightforward. Sign up for the trial. In the trading platforms, you know, we have DT Pro. This is what I trade on. And when I look at the bigger picture stuff, that's DT Pro. Okay. And the charts that I trade with are right here, TradingView charts. Right. And if we go down a little bit, the NinjaTrader 8, a lot of people use Ninja, and that is right there. That's our NinjaTrader 8 install. So if you have any questions, you can type them in, you can email them to us. But this is a trading platform. These right here are the rules for the trade setups. Okay, all the trade setups follow these rules right here. They all follow these rules. Okay. And yeah, and that's it. So on the month now, we're at $9,430. Today we're only up $95. Yesterday only 65. You know, those are pretty low days. We were kind of counting this month until then. We had one $20 a day early on, in the first week of January. Now we're going to end the month of January on a, well, we'll see what tomorrow brings. And tomorrow could be a big day. There's a lot of news events anyway. Even though we have FOMC tomorrow, we still have other high impact news events too. See, we have non-farm employment tomorrow morning. We have GDP, unemployment cost index, and we have Chicago PMIs open up. Those other ones were before the market opened up. We have Chicago PMI once the market opens up, then we have crude inventories, and then in the afternoon we have the FOMC stuff coming up. So we have a lot of things tomorrow during the week. We also have stuff on Thursday and on Friday. So we have a very busy news week this week. Well, it's 12:58. I think I'll just start the live stream a few minutes early. I've gone over all this stuff with you already, and no questions. So let's just get into the live stream and see if anybody over there has any questions. Let me find it. That is not where it is. And now I'm curious. This was today. Yeah. That was yesterday. All right. I will find that live stream here in just a moment. Here it is. All right. I believe the live stream is now live. About that. Here it is. It is live. Okay, good. All right, so here on the ES, we have, well, actually just about it is our first ES trade that we will have taken on the morning session today. It's kind of, actually, I missed it. I was trying to get rid of all that other stuff that was running over there and I missed it. It's gone 4 ticks into profit. So that's something that you should probably know if you don't already know. We don't chase trades. If you have a trade that sets up like this blue arrow here coming out of the ribbon, coming off the ribbon out of the weekly trading zone, that's a great trade to take because you have double resistance right there. But I missed it. And when it went 4 ticks into profit, normally following the rules, the trade rules, that is where I would have moved my stop to break even. Okay, right in there. From there to there is where I would have moved my stop to break even. So I'm not going to try to take enter a trade when I would have been moving my stop to break even. It's too late at that point. Same thing with you trade. It's too late. Now it's got to put in a lower swing. From a blue arrow, it's got to put in a lower swing. It already did on the NQ. So it needs to put in a lower swing and come back and give us a chance to trade it. Okay, which it hasn't done yet. But it still should, could. It could happen. It could happen. So let's see, that is today. Let's go back one more of those. Fresh on that. And so the hue is going to be our first thing here, I think, to give us an opportunity. We don't need it to come off the ribbon there, but we do need it to come out of the overbought. If it does not get into the ribbon or it does not get into the overbought, it's got to be into one of those things to give us a trade. Right? Without that, we have nothing. Now, one of the things that we looked at in the morning session, we looked at the old time stuff back here. You know, if you're looking at this on, say, a 7 range, you look in here. Anytime you get all 4 bars, all 4 lines shown in here, and you get the green line to turn down, that's usually going to work out to be a pretty good trade when you have the separation. Okay, get that green line to turn down. It's usually going to work out to be a pretty good trade when you have that separation. All right, there's the black arrow. We did get into the overbought. Look at the black arrow now. We have some support right here, so you may want to just wait for it to pull back a little bit deeper, get up toward the ribbon. I mean, it is a trade right here, so you can take it if you want to. It's right at the low of the day. This is the low of the day. It's tempting. I'm taking it. Here it is. We took it. Now we'll see if we bounce down through the low of the day or if we bounce back up to the ribbon and then push down. It looks like we might bounce back up. But, yep. All right, so we stopped out on that one. Now, what I think is going to happen here, we did actually put in a little bit lower swing. 1 tick. I'd like it to go down a little bit more before it comes back up, but it could give us a bounce off the ribbon right here. Okay, it could give us a bounce off the ribbon and still be a valid trade for me. It's possible. It's possible. Following the rules. Always following the rules. Okay. And just go all the way back. There it is off the ribbon right now. Now it did put in a lower swing from that black arrow, just a tiny bit lower. So it looks like it's going to make another run at the low of the day. And from here, it'd be a blue arrow, it'd be 63.75 down to 59.75. Okay. From here, it'd be a blue arrow short if it pulls it out of the overbought. And that just went up a little bit higher. So you're looking at 64.25 down to 60 right there, 60.25. And that, though it did not come out of the overbought, that's why you don't have a blue arrow. This is the equivalent of a blue arrow. Right, it does not come out of the overbought. So now we get 8 ticks in profit. It's going to get down to 58 right here. We'll bump that stop to break even. Now, this is on a 15 tick range. So again, we have a 20 tick stop on this. Right, stop is always 20 ticks on a 15 tick range. These are range bars. It's going to get right here. Right here. I mean, right there. And we'll bump that stop to break even. Okay. It's almost there. Almost there. There it is. Okay, stop to break even, and now it should go down through the low of the day right here. It should put a new low in right here. Should run right down through that. But it's a break even. So it's fighting the low of the day right now. It is what it is. Interesting. Very interesting. All right. So this one over here, the blue arrow here that we weren't able to take because it went too far into profit. Still needs to put in a lower swing before we can trade in that direction again. Over here on the Russell, we're pulling back up. We haven't quite tested the rib knot in the overbought, so we don't have anything there. This did not put in a lower swing, so I can't take this green arrow. If you didn't get any of these black arrows, you can take the green arrow, but I can't. okay, because this one right here that I took did not put in a lower swing. Right, does that make sense to you? Over here on this side. All right, now the green arrow, if you waited for the green arrow, then you got something out of that. Right, you waited for the green arrow. But, let's see. If you waited for that green arrow, you would have gotten something there. Now it's got a lower swing, so we can take a trade now, but you see it's going into a no trade zone. It's kind of weird. Over here on the Russell, we also got just barely a lower swing over there. So you can kind of take something there. All these markets are just kind of acting strange right now. Let me go and look in the live stream and see if anybody's got any comments in there. No, no comments in the live stream. Okay, so okay, so we're not going to have another trade over here. We're coming out of the no trade zone, changing directions, it looks like, on the NQ. Man, on the ES, did not put anything there. On the Russell, we're not going to have anything there. We just don't have any trades. The markets are just kind of stuck right now. Okay, it's 1:08, 22 minutes left in here on this super slow day so far today. Yeah, one of the things that I wanted to show you guys, I was gonna go over, if you were in here yesterday and you're looking at this stuff with us yesterday, on the 30-minute, when price was up here yesterday, I was saying as the black gets into the MA1, it's time for it to pull back down and test the ribbon. And I put up some options yesterday, saying that by the end of the week, those options should be worth more because we should be down at the ribbon. Well, the options aren't worth any more today. You would think the puts, if you bought puts when it was up here yesterday, they'd be worth more today. But I think they're holding on to giving them any value right now as they wait to see what's going to happen with the FOMC tomorrow. You know, if we look at this on daily, I don't know how to do that. If we were to flip this to a daily chart, do I have it? Yeah, right here, daily. Okay, and crunch it all up. Let's see, in here, we want the black line to get inside the ribbon and for that to get down here. All right, but I know yesterday we were looking on a 30-minute, which is what we usually look at on DT, and we're saying it's going to get down to the ribbon yesterday, and it did get right down there to the ribbon. I believe we were saying that. It seemed like it was over here yesterday when we were saying that, but I don't know. It might have been down. No, because we're looking at. Oh, let me go and look. I have it right here. These. Here they are. These are what we were looking at yesterday. Okay, we were looking at the other for the SPY. is what we're looking at. So 480 on the SPY. Let's go look at that in here. We were looking at it on the actual SPY yesterday too. So we can go and look at the actual SPY in here. We put this on, and this on, this, and this, and we go to SPY on this, SPY. And so yesterday afternoon, this is on a daily. Yeah, yesterday afternoon, this is what we're looking at. When this crossed in here, we're looking for it to drop down here to 480. Okay, that's what we were looking at yesterday on a daily. And so, yeah, I can see now when I'm looking at it here on the daily. Well, yesterday finished pretty strong. It was looking kind of weak, but it finished pretty strong, and it still got the black step line underneath there. But we'll see what happens tomorrow. All right, when FOMC comes out, I think it's going to get all the way down here and probably hover, end up after it moves up and down. I was thinking I showed it today earlier where I thought it was going to go. The QQQ also, and that finished strong yesterday too. See, but it's pretty weak right now. And you see the black step line is right inside there. You see what happened the last time? It got right inside there. The end of the month, bang, bang. So they're February 5th options. So we'll see what they look like. We'll see what they look like tomorrow. I mean, right now, that's not what I meant to look at. Hang on. The one I meant to look at is this right here. This was what they looked like yesterday. The QQQ and the SPY. Right. And right now they're worth a lot less. Is that even the right one? I'm not sure that's the right one. But we'll see. We'll see tomorrow. Now I wanted to look at Bitcoin while we're in here, messing around with things. Okay, so Bitcoin is recovering here. And remember, this is the channel that I drew yesterday. These green lines. That's the channel I drew yesterday. So we'll see if it kind of sticks to that channel and moves all the way up here. Right, there's got to be some reason for it to move. These other markets aren't anything. We might have something here on crude oil. We might, but I just don't think so. Stefan, one of the guys in the room, was saying the one was moving around today. The YM was like the only market that was really moving. So we can go look at the YM. We'll do that on a 7 range here. Just like this. On each contract and see. Now it was doing this when he said it. It was all in this stuff right here when he said it. Look at that. The YM on the 7 range. It was pretty much killing it when it got in this trend. One of the things that I was saying this morning was when you have the black arrows like this, and I was also showing separation in the slingshot. You have the black arrows, you have the outer band is the red color, and you have separation in the slingshot. What that means is down here, if you had, say, that slingshot on, the red and blue line being up at the top like that. Okay. There. All right. All right, so this right here, you can see the YM is starting to move up. It might pull back and give us an opportunity to trade. I don't have a YM DOM open, but it'll take me a second to open one of those up. The crude oil you can see is giving a long trade right in there, a green arrow long trade. It's got a little bit of a gap up. You might want to wait for that gap to come back down. You can take it right here if you want. It looks like it wants to pull back though down to 77.90. Down to 77.9. It is a valid trade from where it is here. And my stop is in the right place, 10 tick stop. It hasn't gone 4 ticks into profit yet. Give it a chance. The YM, I don't have a YM DOM open, but if I close my Russell DOM, I can probably open one up. Maybe just open one up. All right, we need 4 ticks in profit, and it should get up right there at least. All right, one more tick. There it is, break even. And indices, NQ, Russell Dow, here it is. Russell Dow. Where did that pop up? Oh, way over there. Okay. Oh, we have a YM DOM up now that we can trade with. All right, we're out of break even on that crude. And it's a trade. We'll be able to put something on. Shut that off. Turn it back on. Okay. Strategy is all set up. I don't see any questions coming in anywhere, so if you guys have anything, feel free to give it to me. Looking for this to pull back. All right, and this is the YM DOM right here. So I'm pretty sure my stops are all set for that. Yeah, they are. I don't know if the target's on there. Yeah, it is. 45 up to 70. Yep. It's all set. So we wait. And wait. And wait. All right. So we need to pull back down here to test the ribbon. This one over here we took and we got to bring it on. NQ now is starting to pull back. We're oversold. We're doing a direction change here on the NQ, so we want that to come all the way back down and test the ribbon. All right, we want that to go all the way back down and test the ribbon there. So we're not going to have anything with that. Now, I don't say this often enough, I guess. If you haven't taken a free trial with us and you want to, go here to mytradingiq.com. Click on this purple button right here. There's no credit card required for the trial. Okay, no credit card for the trial. It's going to bring you to this registration page. On this page, all that we ask for is your name, your email, your phone number, all these little drop downs. Yes or no questions, really. If you have TradingView, give us your TradingView login ID or username right here. And if you have an NinjaTrader, give us your machine ID there as well. I can set you up on both of them. If you want to trade on the DOM that I use, then DT Pro. To get DT Pro, you got to go here to trading platforms and just follow these instructions right here. Right, then we'll give you DT Pro. Right. Oops, those are results. Those are results for the morning. Right, so we have a black arrow here. That's because we came out of the oversold, but that's not a valid trade. Not yet. Okay. Because we had a trend change here. We want price to pull back down and test the BDC ribbon. We wanted to test that ribbon. All right, you see the ES has gone right into this weekly trade zone. It's just kind of hanging there. And Bitcoin, we can look at other things. I'm just kind of stuck on these. Right in that box that I drew. And creating that other shoulder with the hit here right now. That one's starting to recover a little bit after a retracement, a big percent retracement of that. Pull back up and test the ribbon right there. See if it bounces down from there. All right, so on the NQ, we're looking for it to drop down just a little bit more. Just a little bit more. And on the YM, we want to drop down and hit the ribbon. Hasn't done that. Doesn't have to actually hit the ribbon. It's just going to get into the oversold to give us some kind of an error. The last one was back here, right at 1 o'clock. Right, since then, it's been pretty steadily going up. Not much to do. All right. So we wait. The NQ is almost down to the ribbon now where you take the trade. It's almost there. And the Bitcoin is at the, not the Bitcoin, Ethereum is here at the ribbon where you would consider taking the trade on down close on the daily. I don't think it's going to go down close today, but I'll just get rid of that. It's distracting me. Okay. And the YM, we want that to pull back down and test the ribbon. Hasn't done that yet. And there's our blue arrow on the NQ. So you can jump on that if you want. Here it is. Now, after 8 ticks in profit, we want that stop to break even. So it's get up here to 84 for us to want to stop to break even. The swing high is up here at 89, just about. So there, stop to break even on this. Right there is the swing high, right up there. Okay, that's where price should go right now. I don't have any risk on the trade anymore, and price should make it all the way up there. Okay, so if I just show a little patience here and let it go, and hopefully we'll see that. Fucking just 1 tick. Cost me $65 to place every trade. So if I do that, it doesn't. Okay, so we're getting up toward the swing high right now. And the swing high happens to be right up here. So I'm just going to get rid of that and lock in more. There's 16 ticks right there. The swing high is right below our 30 tick target. So I just took the swing high off. Look at the numbers going to go up to right here. It should give us a full 8 points right now. See that number right there? All right, and we're out with 20 something ticks. But we did get up to this swing high. This one right here is where it's trying to get up to. I didn't see that one earlier. I was going for this swing high right here at 89. but it got up there pretty well. So that was a nice, easy, profitable trade. And over, we did have this. I don't recall even seeing that, but might have taken it, might not have. I don't remember. On the YM now, though, we want that to pull back down. It's got a black arrow. It doesn't have to actually hit the ribbon because it already did back here, so it doesn't have to hit the ribbon. There, that would have gotten us our full 8 points right there. But it put in a high swing, which is good, and it sets it up for the next trade. Right? And look at the leg length. So that should get up to the weekly trading zone in 3 legs. 3 legs is what it should take to get up to that zone. What do I mean by that? Well, it's in tomorrow's lesson plan, but we'll throw that to there. Oops, to there, like that. That's our leg length. Now, clone it twice. I take the first one and I put it here. Okay, and then after that one is done, you get your next pullback. It'll be something like this. Now let's look at the difference in here. See, the difference that I'm looking for right now is this. How much of a pullback did we get? Okay, this, once it completes this move up to here, that's what I'm wondering about. This smaller leg length is like this one right here. That's what it's doing. But the bigger leg length from here to here is what that is. So we'll have to wait and see what it does and trade, trade what's in front of us. It looks like it's going to give us a couple more opportunities, maybe 2, 3 more opportunities on the way up to the weekly trading zone. If it's going to keep marching all the way up to the zone, it looks like it's going to give us 2 or 3 more opportunities on the way up there. This one right here is just in nowhere, but when it's ready, when it does the pullback, we'll be able to put this in somewhere and get up to the zone on that leg length. I think that's how it's going to play out. Okay, but for right now, this leg length, if we use this right here, if we go from here to the first spot where it kind of choked up, right about there. Oops. Then you bring that to there, bring that up to here, and bring that up to there. That's what it's looking like, the way the market's coming together. It always does the same thing. The market always does the same thing, right? It goes up and down, up and down, down and up and down. And it's our job to buy the dips, right? Buy the dips, some peaks. Or when it's going the other way, sell the peaks and buy it when it pulls back. Like in here, up and down, up and down, up and down. So the software tells you where to get in. All you need to do is sort of anticipate what's happening. And that's what we train you to do when you get into the room with us. All right. Time is up, guys. Time is up. And I am going to go here. Yeah, okay. So if you have not taken a free trial with us, let's go here. And these are our results today. This is our results on the month so far. The month of January of $9,130 with 1 contract. $9,430 with 1 contract. And so far, if we quit when we got our goal for the day this year, so far you would only had to work 7.3 hours. And with 13 contracts, you would have averaged $4,915, and you would have made $39,000 gross right now so far for the month of January. That is with 13 contracts. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com and click this button right here. That is going to bring you to this registration page. Just fill out this page. Once you fill it out, here you give us a TradingView login ID or username. There's machine ID there. Once you fill out, fill it all out, and we will we'll send you everything you need to get into the room in the morning. All right, including setting up your desktop. We'll get your desktop all set up for you. All right, that is it. With that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, in South Mountain, America's largest city park. Dwayne, if you ready.
Yes, sir. Recap of the morning session.
Today, hold on, let me go back and look at it. Yeah, I'm still trying to find it. Here it is. Today, it took 13 minutes and 4 trades to $2,080 with 13 contracts.
Good job, Michael. And don't forget to turn off the live stream.
Yeah, I'll do that right now.
Okay.
Thank you for coming, everybody.
All right, guys, we'll pick up where we left off. We had just covered silver. As we can see, hit both the long target and the short target. The targets were issued last night, 10 minutes into the life of the first 30-minute candle, 6:10 p.m. Eastern. In fact, we'll just breeze through each one real quick. We're still flat and consolidating at the weekly zone on the ES. On the Dow, we are putting in a new high. Okay, seems to be where the movement is today. Overcome this zone. Highest weekly zone overhead, 390.10. Russell. Okay, we dropped below the BBC. We couldn't think about the long target because we had resistance overhead, red and falling. Then once price got below BBC, it found support at the zone. That's what we expect until proven otherwise. And so we get a leg, at a retracement, and a leg. And below the BBC, the step line has crossed red and falling, so we may get a pullback to the BBC and a continuation to the downside. On the NQ, price went sideways right into the open. Then we got resistance overhead, support below. Get below the BBC, and then we got that perfect stack. Price, step line, red and falling, BBC. And come down to the zone and bounce, and we come down to the zone and bounce, down to the zone and bounce, down to the zone and bounce. Finally, 1, 2, 3, 4, on the fifth candle, fifth 30-minute candle, we crack it. Now the zone is 17,622/23. And as I said earlier, once you understand how price behaves around a weekly trading zone, the zones will become one of the most important tools in your trading toolbox. Yesterday low at the zone, yesterday high. We actually overcame that zone, and we're trying to get to the next zone above. Remember, price is always trying to get to a weekly zone. If it's above the BBC, it's trying to get to the zone overhead. It's below the BBC, the green line, it's trying to get to the zone below. Okay, so it took quite a while here, but we finally broke through. So the next logical move would be down to this low. Now the reason price stopped falling here, because it hit this area where the previous bullish cross took place. Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support, just like this. Okay. At this point, I would look for a continuation down to this low, let this low get taken out, and then 17,539 to 519 would be 20 points. At $20 a point, that's $400 per contract traded. If you've earned the right to trade 10 contracts, then that would be a $4,000 move. Don't put the cart before the horse. Follow the 2420 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. Crude. We opened right at the weekly zone, bounced up to the BBC resistance, support, resistance. This time we made it through the zone and we hit the target to the tick. Support sends us to resistance. Resistance sends us looking for support. Support sends us looking for resistance. Now we've gotten above the long target. Short target hit, long target hit. Now, you look left, there's potential resistance here, here, here. And then from 78.60 to 78.75, got some pretty clear skies there. Gold. Come down to the BBC, support, bounce. So you got a leg, a retracement, and a leg that takes you all the way up to the target, to the zone. We consolidate at the zone. Then we get below the BBC and price drops to 2048.2. The zone is 2047/2048. The zones are published Monday morning at 6:15 a.m. Eastern, and once they're published, they do not change the entire week. See, yesterday's high was at a zone. Today's low so far is at a zone, but it looks like we're heading back down. We're below the BBC. We have red and falling overhead. Just know that we're approaching an area of support. And then here's another area for potential support. And then, of course, the zone, potential support. Silver. Only takes 2 pennies in silver to get your goal for the day. So even though this candle didn't reach the long target, everything was in place. Price, step line, blue and climbing, BBC. So the candle opened at 23.32 and ran up to 23.38. That's 6 pennies or $300 per contract traded in that one candle. Earn the right to trade 10 contracts, then that's a $3,000 move. Again, follow the blueprint. Only go live once you've qualified. Only add 1 contract at a time when the blueprint says it's time, and only add with profit you earn in the market. If you have the self-discipline to follow that, it makes it much more difficult to blow up another account. In fact, you'll have to break some rules to do that. Okay? And then the last market, the euro. Here's where we opened. Got resistance overhead here. Sends us, we got red and falling. Sends us to the VVC where we consolidate, and then we drop to the short target. And then we trade through the target, and the market finds support at the weekly trading zone. So the low of the day on the euro is at the weekly zone. High of the day. We spiked the zone right there off the 10 o'clock news and the 9:30 open. But when the dust settled, where were we? Back below the zone. We're just below the BBC. We got red and falling overhead. As this red line crosses below the green line, that's a bearish cross. That should take price down to this low. Now, price, see, we had a huge red candle coming down here off the 10 o'clock candle, 10 to 10:30. But why did it stop right there? I mean, this was a big red candle, but it stopped on a dime right there. Why? Look left. Previous bullish cross. Bullish cross that leads to an extended move. The first time price revisits that area will almost always be good support. So all of our traders were ready. And you can be too. On the daily chart, we still have this little tiny doji. Okay. The low of the day is 49.40.75. The high of the day is 49.57.25. So we have a daily range of only 17 points. Just a few months ago, we would have 20-point 30-minute candles. One 30-minute candle would run 20 points, sometimes more. Now, we're in a position where the entire session, which began last night at 6 p.m. Eastern, 17 points. Now, it looks like it's going to attempt to make a run at the high. We'll see if it can do it. If we can get through the 38% fib extension, which is potential resistance, and the next potential resistance will be the 50 and then the 62. If this black step line crosses blue and climbing, we'll most likely get a pullback to the BBC. And the pullback holds more often than not, whatever time frame you're on. To become a lifetime member, go to mytradingiq.com. Now, let me speak for a moment to those who want to become a lifetime member before the opportunity goes away. Some people are scrambling to put together their money so that they can take advantage of it before. Now, once you're a passport holder, lifetime member, then you're in for life. You don't ever have to worry about any recurring fees, any upsells, any nonsense whatsoever. So we're probably going to extend it till, I don't know, maybe President's Day. I think it's the 15th of next month, somewhere in there. We'll post and publish something official. For those who are partners but not passport holders, you've got a window of opportunity to upgrade. Now, if you're already a partner, you don't have to pay the full price for the passport. We have a special rate for you. Just call Valerie at 949-42-EMINI. If you're already a passport holder, you got nothing to worry about. Nothing for you will change. Everything will remain the same. But once it ends, it ends. Okay? Now, as a lifetime member, you have access to the live training room every trading day, 2 hours and 20 minutes. 9:15 to 11:30 a.m. Eastern. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. If you want a fighting chance at becoming the 1 out of 10, you're going to need somebody to teach you how to do the job. You can spend years and tens of thousands of dollars trying to sort it all out, or you can simply hire us or someone else to teach you. Now, finding someone who will sell you some indicators and some oscillators, a PDF, and some cherry-picked videos, you can find that anywhere. But if you want around-the-clock support, unlimited one-on-one private mentoring, a strategy that is fluid across all markets and all time frames, stocks, futures, crypto, Forex, ETFs, an indicator set that is fluid across all markets and all time frames, the Logic 247 alerts, the concierge trade alerts, the Thursday night members only workshop. This is where you want to be. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Questions 949-42-EMINI or support at CFRN. .net. You know, we're approaching 20 years since we launched CFRN. Is that amazing? And I know some of you have been along with us since the very beginning. I guess we should all get gold watches or something, huh? 20 years. Wow. 2005 to 2025. It was April of 2005, so we're at 24. We're approaching our 24th birthday next year. No, I'm sorry. Our 19th birthday. From 2005 to 2025. So next April will mark 20 years. Let's wrap it up with a good word for the day. Has God ever given you a vision? What do you do with it? Acts 26:19. I am not, or I was not, disobedient unto the heavenly vision. Paul had a heavenly vision. But there are those who speak a vision of their own heart, not from the mouth of the Lord. Jeremiah 23:16. So you must be sure you are operating according to God's plan, not your own or somebody else's. The story of the Tower of Babel teaches us two things. Number one, when people make up their mind to do something, they often succeed. Two, succeeding doesn't mean that you're in the will of God. The word Babel, confusion, means others can think you're right, yet you're wrong. Wow. Is it okay to even make plans and set goals? Absolutely. But your plans and goals should come out of a vision that God has given you. When Paul said in Acts 26:19, I was not disobedient unto the heavenly vision, he meant that there's only one acceptable response to God's plan: obedience. Partial obedience, selective obedience, or delayed obedience are still disobedience. William Carey, who is considered the father of modern missions, gave up comfort and fortune to go to India and introduce the gospel. One of his more memorable quotes is, attempt great things for God, expect great things from God. Say that again. Attempt great things for God, and you can expect great things from God. But you can only say that with confidence when you know what God has called you to do. What He ordains, He sustains. When you set your own goals, you lack a heart-deep confidence that God is doing the work. So you wear yourself out thinking it's all up to you. However, when you know God has given you a vision for your life, you trust Him. Even when you can't see any way to bring it to pass. Part 2 tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.